Trade and Measure Fundamental Events webinar series provided by leading forex broker Tickmill. So great to see all of you here. And today we are going to discuss CPI, or Consumer Price Index, which was released just an hour ago in the United States. Let's see what's the quick agenda for today. First, we are going to see what does CPI describe. Then we are going to discuss why is it important to follow event. Third, we'll see what are market reactions to such data release as US CPI, and then we will cover market action live. Just a small notice that during our webinar series on fundamental events, we are testing different time periods of providing webinars. To sum up, we did the first one just ahead of the release. The second one we provided during the market action itself. That means at the time of data release. And this time we are going to make a wrap up just after the data is being published. So it's easier for you to understand what are the market implications on data release, so you can follow up the details and remember it for the following event. So please have this in mind, and it will be great to share with you. If you share your thoughts and comments with me in the chat section that you see in the lower left side of the screen. So before we start, a quick notice on our broker Tickmill. In case you have got some experience in individual trading, you probably know that any winning trading strategy won't be working sustainably without a proven and trustful partner. This is important to be educated not only in trading skills but in trading conditions as well, so please have a look on features offered by Tickmill. If your broker doesn't provide you with such essentials as competitive spreads, segregated funds, and lack of requotes, you'd better think of it once again. A quick disclaimer and going to the definition of CPI. So, Consumer Price Index, which is also known as headline inflation, displays weighted average of prices for basket of consumer goods and services that include food, medical care, and transportation. This index is calculated by averaging price changes for each item, then weight averaging the numbers. CPI is typically used to identify inflation versus deflation trends. For example, big rise in data reflects period of inflation, whereas low numbers of consumer price index would indicate the higher probability of deflation period. Going further, if you're not a total newbie to the market, you have probably noticed that economic data are being released as a bunch of data and not just a single indicator. Which means that instead of covering only a single CPI number, you need to follow variable readings for CPI, which in particular include monthly and yearly updates on consumer price index. And you would also able to see in the fundamental tables that There is a core price index, which includes all major related products and services. And also there is another kind of index which exclude food and energy. Another interesting point in United States fundamental data on Thursday is, of course, weekly initial jobless claims, which is surely must to follow, as they are anticipating the market reaction as well. And once again, during today's release, you would be able to see if you covered economic calendar. Just let me give you a quick link to it so you can follow my explanation promptly. You can find it on Tickmill website. So here it is. So the third point is Fed members' speech. They usually accompany CPI release and definitely affect the data. So you're welcome to check the link and see the schedule for the fundamental data. Now let's see how core pricing, consumer price index has developed in perspective. I suggest you to see the given slide, which displays CPI data in the range of last 4 years from 2011 to the current point. As you can see from the autumn of 2011, CPI has got clear negative trend, declining from the interim high above 3 percent points, step by step declining into zero and even negative territory. As it was stated in the middle of the current year, minus 0.2 percentage points. That means that basically the year-on-year changes in the recent years have been shrinking in United States economy as a whole, which indicates low inflation expectations. If you're following fundamental agenda, then you probably know that Federal Reserve is trying hard to reach 2% target level for inflation, and he still didn't succeed to do so. So consumer price index progress explains you one of the reasons why it happened so. Let's have a more detailed look on the recent data that we have registered since April. So as you can see, the April has been the lowest reading since the several years, with minus 0.2 percentage actual level. Then the index has recovered slightly to the zero level, climbing to 0.2 percentage points, but definitely staying around zero. So what's the September result? Did you follow the data publication, and maybe you can share with us the actual data? Just a quick reminder that the consensus was set at minus 0.1%. So the correct data is as follows, is following. Year on year, consumer price index change is 0%. That means unchanged. Still, it's 0.1 percentage point better than expectation. So we are having a slight advantage for the United States dollar. Let's see what are the different implications for CPI. For instance, index excluding food and energy has developed as well, 0.2% growth instead of just 0.1% growth as expected. Same comes for month-on-month changes. A quick outlook and comparison to initial jobless claims that came out at 255,000 applications instead of expected 270K, which is a better sign for the economy as well. The number of continuing jobless claims has declined from 2.2 million down to 2,158,000 claims. In general, that means that we are having a slightly better than expected fundamental picture for the United States dollar. Like a quick wrap up for general market reaction. Once the CPI number is above consensus level, it's bullish for United States dollar, and that means that euro-dollar currency pair is going down and United States dollar to Japanese yen is going up, and vice versa if CPI number appears below expectations. Now I'm going to adjust my screen properties and enable for you live coverage for the market so we can see how did it work out for the given currency pairs in particular. Just for the moment. So while I'm setting it up, my key question for you is, what are the currency pairs you are being interested in? If you share your interests, then I would be able to give you a more relevant picture for you. I think I'm going to start from euro dollar. Happy to see that Darren is also interested in the same currency pair. No surprise, as it's most relevant for the currency traders. So I'm going to select a screen area for the charts. Okay, if everything's going fine, you would be able to See now euro dollar chart. No big surprise that we are seeing a decline in the currency pair, which is going along our expectations. Just a quick, did you find the euro dollar chart screens? Then we can follow the explanation. So, as we have concluded from the fundamental picture, the general expectation for the market with the given data would be bullish outcome for United States dollar. That means in attribute to currency pair euro to United States dollar, it should release in decline of its value. And that's exactly what we are seeing now. Day change for euro dollar is 0.9 percentage points. Now let's see what are the levels that we need to follow for today. Let's follow a deductive method, which means we're going from higher time frames to lower ones. So currently we are on daily chart, and we are seeing a bearish candle fulfilling the previous bullish candle. Once this setup is confirmed, and it will be done so after the today's Japan candle would be closed, with the close level below the opening level of yesterday, that would indicate the probability for further pair decline. So this is the first signal that you need to notice while analyzing euro to dollar. We are having a probable bearish engulfing. Let's see if we are having some static level to follow. I would suggest to choose out the static resistance of 1.1436 or 1.1440 that happened to appear as clear resistance point during February of the current year as selected. Also in the middle of May, which has consequently led in June to hand and shoulder structure. Then it worked as an local resistance point in September, just last month. Currently, we are seeing an interesting market reaction, as just yesterday the price has broken above this level, but it succeeded to return below it very quickly. So the first outcome for daily time frame is a probable bearish engulfing, and the second probable outcome is the static resistance at level 1.1436. Let's see what 4-hour chart shows us. On 4-hour chart, we are having another static point of 1.1380 that has been completed. Also nearby previously described static resistance 1.144. And interesting to notice that we are testing this static support for current market situation. Since yesterday, it works as support level, as we are declining from the local top of 1.1494, and it's definitely important to follow if we're going to make it or break it. So please remember another important static level of 1.1380. On the hourly chart, no surprise that we are having some correlation between dynamic trend lines that contribute to support area 1.1350. Let's zoom out to see how they were chosen before. So, except for the historical trend line, which is also confirmed and repeated by different levels, so we are going to hide it. We need to concentrate our attention on the recent upward wave for euro dollar starting from 23rd of September. The first important trend line is the green one, which is selected through the local highs for the 4th of September, the high of 1.1296, and the 2nd of October, 1.1318. Is projected and confirmed at the time point of 13th of October, price level 1.1342. And it's going to work out as a dynamic support once again on the actual projection level of 1.1352. Second line that we have just recently touched is connecting the upper trend line from the lows of 6th of October and 7th of October, 1.1172 and 1.1205 accordingly. As you can see, the given triangle between 1.1352 and 1.1359 contributes to a single support area for euro dollar at the current moment. What are the probable market reactions from the current point? If you have got any of your ideas, you're most welcome to comment in chat. I'm seeing a question on Fibonacci. Yes, as I'm following naked trading strategy, I'm following Fibonacci as well, but currently working with dynamic levels, so you can see a bit later how we add and use them. So in my opinion, there are two possible outcomes from euro dollar from the given price level. Let me zoom in. So the first probable idea, let me mark it with 0, is that euro dollar retraces from the explained dynamic support area back to 1.1440, which was the static resistance point for the currency pair. The other probability is that it breaks the given dynamic support level from the current point, and then it leads to the following support level of 1.13. This following dynamic support has been confirmed with the dynamic trend line, which consists from the lows of 1st and 2nd of October between 1:11:32 and 1:11:48, and hasn't been tested since 6th of October, so for almost 2 trading weeks. Now let's move to intraday charts. Let's take 15 minutes, for example. So we can see in better details the recent the euro dollar. Probably we can go to even more detailed picture on 5-minute chart to make a proper wave count and also analyze the recent decline from the local top of 15th of October that was posted earlier today in the morning. So starting from the top, we connect it with two local extreme points to see that we are having some short-term support at 1.1410, 1.1425, depending on the volatility of the coming trend. We are also having a short-term support area at 1.1425 as well. And having a three element structure. So this is the end of first negative wave. That's the point of correction. And currently we are seeing a third wave in development. So it could become quite huge. Assuming that we are dealing with 3 wave elements, that means that we need to provide the Fibonacci outlook just for the price range of 113.60 up to 114.60. 100 pips exactly. And if we are dealing with the impulse mode, we need to follow closely 1.1425 price point, which should not be breached to save the core of impulse structure. According to Fibonacci, it's quite likely that we are going to meet both requirements. From one side, test at least 38.2%. Just let me change it quickly for correct numbers. So from one point, the requirement is to test 38.2 percentage points correction area, which is set at 1.38 or basically 1.14 exactly. And do not touch the 1.14 25 point structure, which would break the impulse structure of the short-term downward wave. So what does this explanation give us in short? Currently, we are staying right on the support area of 1.1380, and we are also seeing that there is a dynamic support area between 1.1350-60, which is likely to be tested in the coming hours. Thinking further, we are expecting that the price is going either to retrace back to 1.1436 resistance area, but we also see that we are having a 1.1425 resistance area, which we also need to take in mind. And from the other point of view, we are having the following support level projected at 1.13 exactly. So in my opinion, the most likely scenario is that the price returns for a short time the area of 1 exactly to 1.1410 and then continues its decline to 1.13 price level. In case the euro dollar gets above 1.1425, it's quite likely that it's going to test 1.1440 and subsequently 1.1460. That is the outlook for euro dollar. I welcome you to share your thoughts on the given example and probably even share your comments on trading this currency pair. You're mostly welcome to leave your ideas in chat. To sum up, I would like to notice that the current data release has been quite logical in terms of market reaction. We have seen the better than expected consumer price index data, as well as better numbers in initial and continuing jobless claims, which given as an expected short-term result of Euro USD sliding down. And currently we are having two possibilities of having a modest correction to 1.14 to 1.1410 and then resume of downward move for euro dollar. The other opportunity is a retest of 1.1425, 1.1440, and 1.1460. And finally, the third opportunity is the immediate continuation of the decline in the direction of the following dynamic support set at 1.13 exactly. Looking at the upcoming fundamental agenda, I invite you to follow Fed members' speeches that are going to be out in just 20 minutes. First, Fed's member Bullard will be speaking, and right after him, Fed's William Dudley will cover up recent changes in Fed monetary policy. As for me, if you're having any exact questions on the given topic, either the fundamental layout or consumer price index that we've been discussing in the first part of our webinar, or the market dynamics for euro dollar, please share it in chat. Well, once there are no questions, I'll take it as a small thank you from you, which will indicate to me that the given content was clear and understandable for you. Then I invite you to test the given practical outcomes for trading CPI event in the following months. And once you test it on demo account, it's high time for you to check its performance live. That is the right time when Tickmill can help you, as the broker offers you classic account where you do not have time, or you don't have to deposit as much, and where the trading conditions are nevertheless great. With Tickmill's classic account, you can enjoy trading with quite low spreads. It starts at 1.2 pips on Euro USD. In addition to this, there are absolutely no commissions attached to this account. This is quite an important feature for the beginners, as it lets them to focus primarily on the market without spending time on calculating the profitability due to the commissions. To sum up, consumer price index is definitely a fundamental indicator to watch if you're a daily trader. I would like to thank all of the participants of the current webinar for attention and involvement in the webinar. And I'll use the opportunity to announce the following fourth part of Trading Major Fundamental Events series. Next Thursday, October 22nd, we are going to discuss an exciting event of ECB interest rate decision. I'm going to share with you in chat the registration link for the upcoming webinar, and it would be great to see all of you in our next session. I believe that we are going to expect a huge volatility in the upcoming session. But for now, thanks again for the attention and attendance of the webinar, and would be happy to see you again among Tickmill webinars. Have a profitable trading day. Bye.